Let me ask you a question. You've been paying your credit card before the due date every single month. Maybe you're even paying the full balance. You're doing everything the bank told you to do. So why is your credit score still not where it needs to be? Why does it barely move? Or worse, why does it drop even when you're doing everything right? Well, I'm going to tell you why. Because the bank gave you one date to focus on, and that date is designed to keep you in the dark. Every single month, something is being reported about you to the credit bureaus, and you don't even know when it happens. That's a second date, and that's the date that really matters. A date buried in the fine print. A date the bank never sends you a notification about, never highlights in their app, never mentions in their helpful financial tips that you get by email. That hidden date is controlling your credit score more than anything else you are doing. Today I'm going to expose it, and I'm going to show you how to use it against the system that's been using it against you. Most people know two things about their credit card: the balance and the due date, and that's the way they want it to be. Do me a favor before we get into this great information. Hit that like button so more people get to see this. Subscribe to this great channel. Hit the notification bell so that you know when we're doing great things like uploading this content. Now, the two things that you know about the credit card: the balance and the due date. That's what the bank wants you to know. That's all they want you to know. Think about what happens every month. Your phone buzzes. Payment due in 7 days. Your statement date arrives. Minimum payment due by the 10th. Every notification, every email, every alert from your bank is built around one date: the due date. Now, here's what I need you to understand. That's not customer service. That's information design. They designed that experience on purpose, because as long as you're focused on the due date, you are focused on the wrong target. Let me give you an analogy. Your credit score isn't a video recording of your financial life. It's a snapshot. A photographer takes one picture at a specific moment. Whatever's in the frame at that moment is what gets captured. The bank controls when the camera clicks, and they never told you when that is. So let me show you exactly how this works. There are two dates on your credit card. Two, not one. Date number one, the due date, when your minimum payment must be made to avoid a late fee. This is the date the bank promotes. This is the date they remind you about. Date number two, the statement close date, also called the billing cycle close date. This is when your billing cycle ends. This is the date the bank reports your balance to Equifax, Experian, and TransUnion. I've got to say that again because this is highly important. The credit bureaus don't see what you pay. They see the balance that was reported on your statement close date. That's it. That number becomes your credit utilization ratio. Let me walk you through this with real numbers. You have a credit card with a $5,000 limit. You spend $3,000 on it this month. Good, honest spending, business expenses, groceries, bills, normal life. Your statement closes on the 15th. Your balance is $3,000. That's 60% utilization. The bureau records 60%. Your due date is the 10th of the following month. You pay it in full, every single penny. But the bureau already took the snapshot on the 15th of the prior month. They saw 60%. Your score already took the hit. Same person, same card, same spending. But what the credit bureau sees is someone who appears financially overextended because the balance was high when the camera clicked. And here's the truth of the matter. The bank knows this. They've always known this. The question is, did they tell you? Absolutely not. They sent you a reminder about your due date. Most people think a few points on a credit score is a small thing. It is not. The score that gets reported based on your statement close date affects everything attached to your financial identity. Mortgages. The difference between a 720 and a 760 can cost you tens of thousands of dollars in interest over the life of a loan. Not because you were irresponsible, because the snapshot was taken at the wrong moment. Auto loans. Lenders pull your score before approving your rate. If your statement close date fell the week before you applied and you had high utilization, you got a higher rate. Apartment applications. Landlords run your credit. High reported utilization signals risk, even if you paid everything off the week after. Credit limit increases. Banks use your utilization history to decide if you deserve more credit. High reported balance means no increase. Lower limit means higher utilization percentage, and it compounds. And for the entrepreneurs in the room, hear me on this. Your personal credit score is often the first thing a business lender looks at before your business even gets a second glance. This isn't just personal finance, this is business infrastructure. Drop this in your mind and let it sit. The system isn't broken. It's working exactly as designed. The only question is, who is it designed to work for? Now, you know what the statement close date is. Now you know why it matters. Here's how you take control of it. This is your strategy. Move number 1. Find your statement close date. Log into your bank's app or website. Don't look for due date. Look for statement date, billing cycle close date, or just billing cycle. It's usually under account details or settings. If you can't find it, call your bank directly and ask, what date does my billing cycle close? That's step 1. Move 2. Set your own reminder. 5 to 7 days before that statement closes, you want your balance paid down, not to zero. You need a small balance reported so the account shows as active. But ideally, you want to be under 10% as a goal to get started. On a $5,000 card, that's $500 or less. Move 3. Pay strategically, not just on time. You can still use the card freely after the statement closes. Go back to spending normally after that date. Pay it down again before the next close. Rinse and repeat. You don't change your spending. You didn't work harder. Same person, same habits, but here's the key. Different positioning, and that made all the difference. Success doesn't happen by accident. It happens when you understand the system and position yourself the right way. Listen, you might want to go back and listen to that part all over again because you need strategy. Do me a favor real quick. Subscribe to this channel. Hit the like button. Hit the notification bell because we want as many people as possible to see this information so they can be on top of it just like you. Now, in just a second, I'm going to show you the most powerful move in this strategy, one that almost nobody knows you can even do, because the bank definitely isn't going to tell you. I'm going to show you how to actually change your statement close date and why that single phone call could restructure your entire credit profile. Now, this is advanced. Most people don't know this exists. You can request to change your statement close date. Most major credit card companies allow this. Chase, Bank of America, Capital One, Citi. You call customer service and ask. This is exactly what you're going to say. I'd like to request a change to my billing cycle close date. That's it. They may ask. You don't owe them any explanation whatsoever. Say you prefer it aligned with your pay schedule. Now, here's why this matters. If you get paid on the 1st and the 15th, align your statement close date so that you can pay down the balance right after payday, before the snapshot is taken. And if you have multiple credit cards, this is where it gets powerful. You want to stagger your statement close dates so they don't all report on the same day. That way you can manage utilization across all of them in a rolling system instead of scrambling before one big reporting window. Now, the bank isn't going to advertise this option. They're not going to email you about it. They're not going to give you any notification saying, hey, this is something you might need need to do, because you can restructure your statement date, how your credit score looks to the business. They're not going to tell you how it looks to the bureaus. They're not going to do all that. That information is yours to find. If you know to look for yourself, you are going to be better off. And now you know. When this strategy works best is a question you need to ask. And I want to be clear about this. It works best when it's part of a system, not a one-time fix. Now, I said earlier, this video is for everyone, and it is. But if you're building a business, I need you to hear this part specifically. When you apply for a business line of credit, a business loan, or SBA funding, lenders pull your personal credit profile. Your personal credit utilization ratio is one of the first things they see. Here's where the trap compounds for entrepreneurs. Business owners tend to run higher balances on personal cards because they're investing in their business. Tools, software, inventory, travel, all legitimate, all necessary. But if those balances are reporting high on your statement close date, your personal credit profile looks like someone who is overextended, not someone building an empire. The bank doesn't know the difference between I spent $4,000 on equipment for my business and I can't control my spending. They see the same number. They make the same judgment. Credit isn't just about borrowing money. It's about positioning yourself for every opportunity that's coming. An opportunity in business, funding, rates, approvals run directly through the credit profile you are maintaining right now. So here's the practical instruction for you. Audit all your personal cards. Find every statement close date. Build a monthly calendar. This isn't budgeting advice. This is strategic positioning. Now, let me bring this home. There are 2 dates on your credit card. The bank built an entire communication system around one of them. The other one, the one that actually controls your credit score, they left for you to find on your own. Here's what I want you to remember. 3 actions before you close this video. 1, find your statement close date on every card you have today. 2, set a reminder 5 or 7 days before that date to pay your balance under 10%. And 3, if you have multiple cards or the date doesn't work with your cash flow, call your bank and request a change. This is what the CBL Wealth Blueprint is all about. Credit, business, and life working as one aligned system. When your credit is positioned correctly, money flows. When you understand the system works for you, not against you. Well, drop a comment below. Did you know about the statement close date before today? I want to hear from you. And if you want to go deeper, if you're ready to build a credit strategy that actually aligns with your business, the link is in the description to get that business coaching call. This is the way we get to work together on building and scaling what matters to you. Well, I'm looking forward to actually sharing more great insights and tips for you in the coming videos. Please stay tuned. You have an absolutely awesome rest of your day. Be blessed.